Very good morning, my dear students. So, you are welcome to class 11 accountancy class once again. So, we are going to discuss the theory base of accounting, chapter 2. So, last class we already discussed about concepts, correct? So, before that, here I want to quote Abdul Kalam: if you salute your duty, you no need to salute anybody, correct? But if you pollute your duty, you have to salute everybody. So, our Kalam says that so duty is very very important. So you have to work accordingly. Okay. So here that's what the accounting concept discussed the previous class. So different accounting concepts. So entity, money measurement concept, periodicity, accrual, matching concept, going concern, cost concept, realization concept, real aspect, conservatism or prudence, consistency, and materiality. Correct. So different type of accounting concept we discussed. For today, we are going to discuss very important one: system of accounting. The system of recording transactions in the books of accounts is generally classified into two types. Okay, the first very very important one, double entry system. That's what we're going to discuss in future classes. Okay, so double entry system is a very very important one. So as you know already, double entry system is a modern accounting system. It's based on double entry system, which is based on the fundamental accounting equation, correct? It's nothing but assets is equal to liabilities plus equity. So the double entry accounting system ensures that the accounting equations always remains in balance, correct? So debits must be equal credits. As you know already discussed in the first class, who is the introduction of double entry accounting? Luca Pasoli, developer of double entry accounting, it's a father of accounting. Okay, so double entry accounting is based on a simple concept. That is nothing but each party in a business transaction will receive something and give something in return. Right. So in bookkeeping terms, so what is received is a debit and what is given in a credit. The T account is a representation of a scale or balance. See here the scale mentioned here, scale or balance. Receive debit and give credit. Similarly, a T form of account, left hand side receive debit, right hand side give credit. So detailed discuss on this class the meaning of debit and credit and everything. Here we are going to discuss how we are there writing accounts. First one is double entry system, correct? So double entry system, it recognizes that every transaction has a twofold effect. That's what discussed now. The method of writing every transaction into two accounts. Of these two accounts, one account is given debit while other one is given credit, correct, with an equal amount, so that the accounting equation is always in balance. So on any date. So nothing but total debit is equal to total credit. That's why it is called double entry system. So every debit aspect correspondingly there is a credit aspect. Okay, the second one is single entry system. So what is the meaning of single entry system? Single entry systems record transaction with a single entry and only maintain one side of every transaction. That is nothing but only cash transaction and personal transaction. That's why it is called single entry system. It will record incomplete transaction. Correct. That's what the single entry system. So first one is double entry system. Second one is single entry system. So mainly we are going to discuss double entry system. Correct. So here what is the difference between single entry and double entry? Here single entry is what? Incomplete records. Okay, so only we maintain cash transaction only. But here double entry, both cash and credit transaction. As we do the business, both cash and credit. That's why here double entry complete records. We mentioned cash and credit transaction. Then on the single entry, statement of profit and loss in prepared to calculate profit, just to calculate profit. But here the trading and profit and loss is prepared in order to ascertain the profit and loss of business. Okay. Here we will learn later on the meaning of single entry. Under that, statement of affairs is maintained. Here we will call balance sheet. Okay. Then here two aspect of transaction is not recorded, correct? So only the cash basis. But here two-fold aspects of each and every transaction is recorded. That's what debit and credit. Every giving aspect, receiving aspect. Similarly, it's adopted by small scale business, like for example, potty shop, sole trader, like that. Mostly they will follow single entry. But adopted by large scale business for double entry. So double entry system is best for the large scale business, correct? That's what difference between single entry versus double entry, correct? Then the next discussion is very very important. Accounting basis. So what is the meaning of accounting basis? We are basis of how we are doing accounting. So one is cash basis accounting, other is accrual basis accounting. So here the cash basis accounting, accrual basis accounting, both together, cash flows and revenues, expenses recognition. But the cash basis accounting at same time, whenever you receive cash, then only you go into account. But here it may different time. So here see cash basis, you don't recognize your income until you have the cash in your hand. So bank account, correct. So any transaction when you got money, then only go into record. That's what is called cash basis. But accrual basis, once you recognize the income, the instant it happens, whether you have the actual money yet or not, whether you received money or not, once you recognized as income, as a revenue, you want to account it, correct. That is called accrual basis, correct. So record income when you receive it, coming under cash basis, record an expense when you pay it, that is coming under cash basis, correct. So what is the difference between here also, what is cash versus accrual accounting? Nothing but see here, the difference between cash basis accounting and accrual basis accounting. Here the cash basis, revenue is recorded when cash is received, but in accrual basis, revenue is recorded when it is earned. Okay, so any goods just you sold, whether received money or not, you want to account. Similarly, any expenses you have to pay or not, you have to account the accrual basis, correct. Here expenses are recorded when cash is paid according to cash basis. But here accrual basis, expenses are recorded when incurred. Okay, so a cash basis not allowed under GAAP, generally accounting policies. Here GAAP, it is not allowed, but here generally used by larger business, correct. So that's why keep in mind that the accrual basis is the preferred way to do accounting, and it is required by GAAP, correct. So that's what accrual basis is very, very important when compared to cash basis, correct. So again, so what is cash basis? Once you received money or you have paid, you have to account. Accrual basis, whether you received or receivable, whether you paid or payable, you have to account. That is called accrual basis, correct. Then next one is going to discussion the meaning of accounting standard. Here what is the meaning of accounting standard, correct. Say as a accounting you have to follow some standard, some uniformity, rules and regulation, correct. Say a standard means generally accepted model or an ideal. It is accepted for global or universal, correct. Thus accounting standard means generally accepted accounting principles, correct. The accounting standards are written documents containing the generally accepted accounting principles, correct. That was GAAP, issued by ICAI. What is ICAI? Institute of Chartered and Accountants of India, in India. There are totally 32 accounting standards is there in India as on date. So what is the main objectives of accounting standard is to standardize the different accounting policies and practices followed by different business concerns. So we have to follow the accounting standards, uniform rules and regulation. That's why all the companies, they do business in a uniform way, easily understood by the external user, internal user, correct. So any company, they simply they follow their own rules and regulation. It's very difficult to understand by the internal and external user. Okay, that's what here. What is the objectives of accounting standard? Again, the basic objectives of accounting standard is to remove variations in the treatment of several accounting aspects and to bring about standardization in presentation. Correct. So standardize the accounting policies. So you have to standardize the accounting policies or the framework, rules and regulations. Okay. So add the reliability to the financial statement. So eradicate baffling variation in treatment of accounting aspect. So we have to avoid the unwanted variations whenever you're treating the accounting transaction. Okay. So it facilitates the intra-firm and inter-firm comparison. So nothing but company to different companies are the same sister concern, correct. That's what the main objectives of accounting standards.